Tom, thanks so much for joining us.
Great to be here, Pierre.
Tom, since the last time we talked, there's certainly been a steep ramp up in activity in the market. Volatility has returned. It's been a pretty hectic 6 months, again, in the market compared to previous years. There's a lot of trade noise going on right now, trade war perhaps. There's renewed volatility in the market. There's rising interest rates. And then there's also the uncertainty caused by Trump and foreign policy. Mm-hmm. That doesn't seem to matter to markets right now. Are we in a stealth bull market?
So it's funny, with all that noise that you just talked about, markets are up relatively well this year. Canadian markets, of course, quite strongly, and the U.S. markets are hidden in itself, and the index,
right.
Large indexes are up. But if you actually dig in, there's actually some weaker numbers. First up, I wouldn't say we're in a trade war. Perhaps I'd actually say we're in a trade war. Which is actually quite a concerning thing, and we'll get to that. I think the markets continue to sort of shake off all of the noise. Now, there's always noise in the market. There's always, some would argue that every environment, there's always something to talk about. I think the concern that I would have is that the market seems to continue to be complacent to pretty meaningful issues, namely, of course, the trade issues, but some of the political risks that are out there. And in general, just some of the interest rate environment changes that are out there too as well. So it's going to be an interesting environment. Stocks, we just recently had Netflix, report negative, earnings expectations, or actually misses, which on a high growth company that has, they have to be perfect, and so when they miss, it's quite awful. But of course the market quickly recovered that and actually went up to new highs. So when that sort of thing happens, it sort of tells you that sometimes we've dislocated fundamentals from market pricing, and that's when I think we sort of say that we need to be a little bit more concerned. We absolutely are concerned right now, and we have said I think the last time we spoke that the markets likely would see new highs and continue to sort of rally, in the year. We believe that investors at this time should be using these as an opportunity to take profits as opposed to being more aggressive. Strength should be a time to actually lighten and take profits off the table, and this is probably a good opportunity to start doing so.
You think it has to do possibly with the fact that the economy, the Fed remains very accommodative, or monetary policy remains very accommodative globally, even though rates are rising in the U.S. and here?
Well, I think the Fed's in a really tough place, and I think no question. I mean, rates are low, and discounted cash flows therefore suggest pricing can still remain high. I just think it's bull markets always climb a wall of worry, as people say, and late bull markets always overextend their fair value. And likewise, they always overshoot their downside on the bear markets. So these are the times when investors actually need to be more alerted or attentive, and I'd say professional managers, not just investors, but professional managers. So advisors and money managers need to be thinking, what is my discipline today? What's my plan? What I get concerned about most as a money manager is that people don't have a plan. They just sort of are riding the wave. And so therefore you're just buying the market, you're buying an index or whatever it be. But if you really want to be a a professional manager today, you need to have a discipline as to what it is you're going to do in the face of these types of environments, because this is when we get paid the real money. This is when we really deserve what we're supposed to, with our fees and all the rest of the stuff. And so we need to start to really ask ourselves, do I have a plan right now? What am I going to do, and why am I going to do it? And maybe the plan is, I fundamentally believe the markets are going to continue to rally, and I think all of this noise is just noise, and all the reasons to continue to drive forward, and that could be your plan. That's your conviction plan, then go for it. But if you don't believe that, then start to come up with a plan of what you're actually going to do in this stage.